Hello, good morning, everyone. It's the host DK305007, and this is Free the Trade. Today, we're going to be jumping into SPY, the Qs, IWM, and talking a little bit about how tariffs are affecting and changing the market. We also may revisit how retail traders play into this and kind of the things that we've been seeing and why I think that SPY is ready for its turnaround. First off, we're going to start with our pre-market analysis, which we start usually by the Fear and Greed Index. We've seen this the last couple of days bouncing back and forth from 17, 18, and 19. It's currently at 19 here in the pre-market on March 6th. We're also looking at a V here on the market momentum. This tracks the S&P 500 with the 125-day moving average. It is currently at extreme fear. We have pushed through the 125-day moving average. However, I don't really necessarily see this as much of a problem since we V'd off so heavily. Also, there's some data and some calculations I want to share a little bit later, which makes it seem like we're headed for market turnaround. And so, not a lot to be too worried about here. It looks like it's just a normal market pullback or a correction. It hasn't even hit recession levels or, a crash, even though many people are calling it a crash. So, not that big of a deal. We're looking at a turnaround. Nothing to be worried about on the SPY. All right. VIX is increasing, indicating volatility, extreme fear. It's at 23.66 as we speak, as of this last update here. We were talking about junk bond demand earlier. Junk bonds are risky investments. Oftentimes, whenever the demand or there's an increase in demand for these investments, it often indicates, hey, we're headed for a correction because people are now they're less fearful and they're willing to risk money on a riskier investment. And so looks like we V'd on that, and who knows, potentially we'll see an increase in that will follow the market recovery from SPY. So good things to look at in the pre-market. I enjoy watching it since there's such a new increase in retail investment. Fear and Greed Index really helps you keep your finger on the pulse of what the retail investors are doing. Institutional investors tend to be a little bit more they don't tend to respond as quickly to the fear and greed. They tend to take the safer trades. Retail investors tend to be a little more emotional in their trades or reactive in their trades. So good things to consider. Let's jump to the news and to the futures. S&P futures, they are down 578 225. The Russell is down. NASDAQ is down, and Dow is also down. These four are all tracking each other. The ones we like to follow here at Free the Trade are the S&P, the NASDAQ, and the Russell. You can also follow the Dow. I personally don't do that. I find that with the S&P futures, it's a general tracking of the top 500 largest companies in the United States. The NASDAQ focuses more on I believe it's the top 100 tech stocks in the United States, or in the United States S&P 500. And then the Russell focuses on small cap stocks. So kind of how I like to look at it is, hey, this is big money, this is average, and this is small caps, which are a lot more volatile in their movements. And so we saw some trading yesterday that I did. Some of you may have seen it, where we were trading IWM and QQQ for the increased volatility over SPY because it tracks less equities or stocks, and so it has a larger swings when it does swing. Generally, these three are all going to be following each other, up, down, and if they're not, and there's only one that's doing something different, you can actually take advantage of that, because chances are it's going to eventually join these back. And so if it's up, you could maybe short sell it, and so when it falls back and joins the others, you can make some profit on that. But yeah, just some interesting tidbits around those. Let's jump into SPY and take a look at the news here. All right, it looks like they are also noting that futures are a little bit lower here. We also know this. It could be interpreted as negative news, but really it's just the same information that's on the charts. So almost a repetitive headline if you're looking at the charts as well. This looks like an opinion piece, but it does look interesting to me. I am interested in what they're thinking could turn the market around, since we already have our own ideas of what the market needs. Okay, let's take a look at this article, and then we'll jump into the charts. Okay, let's Stocks struggled to start 2025. Uncertainty over President's tariff policy has put investors on edge. Recent economic data has surprised to the downside. I don't think that's necessarily true. If you've been watching data for a while, you were expecting an economic turn or a downturn. That's why Warren Buffett was selling off his SPY. That's why I sold off SPY recently. Not that I don't trade SPY. I sold off the holdings in it because it was 100% headed for correction. It's always been. There's cycles to the market, and we've been in a good bull cycle, but it was time for a pullback so that the stock could gain some, build a better foundation so that it could go back up again. And that's generally what we see in the market. It has these up and down cycles, but it generally is heading up. And so nobody should be surprised that we're seeing a 1 or 2% drop in the SPY, especially when you look at some of the things that occurred as the administration left, or the previous administration left. There were things like they shut down, and this isn't a political thing. It's just a fact. There were a lot of oil wells shut down. There were power companies shut down. There were a major trade deficit. And so the fact that we were gaining and gaining and gaining in the midst of a lot of negative news, if you look at August and if you look at December, there were negative news from the Fed, and we really didn't respond in the way that we should have. We dipped initially, and then we bounced right back into our all-time high. And so SPY was very, very much overbought. A lot of the top stocks in SPY were overbought, and it's not a surprise that we're correcting on that. That's always going to happen. And if you want to talk about some of the ones that were really, really oversold, Tesla's one of the main ones, and Palantir's one of the main ones. Meta was probably, I haven't really looked into charts on Meta, but I'm assuming it was probably pretty oversold too. Nvidia, it's currently really, really great price. Its fair value is around like $150. And it's positioned to really see a lot of increase. I think this right here is very, very, very wrong. Wow. I think we saw a lot stronger growth than what should be expected as the normal. However, since we've been in a bull market, we have seen some incredible growth. Like, for instance, if we look at NVIDIA, when they released their earnings report and they're showing growth of 64% in 1 year, a lot of people were like, oh, that's terrible because they did 128% previously. And you have to consider 128% growth is not a normal thing. You look at some of these other these other investments that aren't going 128, they're going 6%, 10%, 20%. Oh, that's amazing. And then you go over here, and because it fell from 120 something to 60%, it's now, I don't know, a bad stock or something, or it's losing momentum. I don't think so. I think more what we saw with Nvidia particularly is a shift in market, in their target market, and when that happens, it takes a little bit to kind of realign all their internal research and development, sales, and marketing to go after that new target market. And that's what we saw with the introduction of AI and transitioning more away from like a retail approach with their GPUs and stuff to a more AI data center focused market. So 5 minutes till the market opens. We're just going to go ahead and quickly get through the rest of this and jump into the charts. Okay, we're in the the third month of 2025. I mean, I don't see how we're not going to hit that 2% growth. So, not really worried about that. I know a lot of people have blamed it on Trump. That's okay. I don't necessarily feel like it was particularly due to Trump's tariffs. I think if Trump hadn't done tariffs, or if Trump hadn't made some of those statements, then there would have been some other influence or some other factor that we would have seen the exact same thing. Furthermore, it probably would have happened or occurred anyways without any input, just because the natural cycles of the market tend to have those up and down trends as it corrects, and then as it pushes for an all-time high. So, not a real big fan of this article, to be honest. It looks like there's a lot of misinformation in it. I'm assuming it's probably just an opinion piece, since there isn't a ton of data or facts in it. But it does create unnecessary fear in the market, which can lead to increased volatility and stuff. Let's jump into the charts here. All right. Here we have SPY. SPY is, once again, the index or an ETF that tracks the SPX index, which is a index of the top 500 largest stocks. Changed up my chart a little bit. As you can see up here, we have the highs marked 583.05 and 575.06. So thankfully, we don't actually have to go in with the little trend lines or the horizontal lines and try to find those. Also, I've added some banners and some lines here, which help us when we zoom in to kind of see where everything is and gives us the number exactly. This right here is a countdown to the next candle. At this point, we have about 30 seconds until this 1 minute candle changes and we see what the next one's going to be like. Just a small few changes. I particularly like the ones down here that show the RSI levels. Just super convenient, meaning I don't have to try to put my mouse and hover and say, okay, this is about 55. No, I can just look and say, okay, it's 41.49. So that's some changes we've made. Let's jump to the week. When we do the week, I like to look at 30 minutes to an hour. We're going to look at an hour here. Okay, 572.25 is our low. We've got a high of what looks like 600. Yeah. Switch to the 4 hours just to get a bigger close-up view. All right. Looks like we're headed back for another slight downturn here, according to the RSI. Generally, we bounce off the 30. In this case, we bounced off about 27 or so, 27.47 it looks like. We talked about the lower limit that SPY could hit as far as pricing, and we did the math. We looked at the different highs and the different lows and the average drop since COVID. We looked at the average drop across the entire history and data of the market that we have, and we came to the conclusion that SPY could only drop to about 565 before the base fundamentals of the stock and the financials would override investor sentiment through institutional buying and through institutional investments. And so what we're seeing here is that the actual number, when we took out COVID-19, because that was an outlier, and redid all the math, we found that the number that SPY would sit around as about 576. And so what we've seen here is a really interesting correlation. We did the math a couple days ago, and we've seen for the last few days it hit 575 and like 575.90 over here. Let's see, the low was, it did drop below. It did drop to 572 at one point, but generally it was staying about the 570. I'm sorry, the 5. Where are we at? Okay, yeah, so about 575, 574, and bounced up. And what we're seeing is a very close correlation to that calculation we did. And here we are. Welcome to the market, ladies and gentlemen. It is open now. Let's take a look at what's going to happen here. But yeah, we're thinking that the lowest that it could possibly hit would be about 555 or 565, but we're leaning more towards the 565 since that's the calculation we did that didn't consider COVID-19 since it was an outlier. So we're in a sell-off period right now. Looks like we're heading into a buying period. One could buy calls if one wanted to. Looking at here, it could potentially be pretty shallow, especially if this one pulls through. Looking at the overall 15-minute, we're already up from our lower amount. We're increasing on the RSI 14. So I think that we're going to have a bullish day. We just starting off red, just to do a little bear trap here at the beginning. So not too worried. We're not going to place a trade at this time. However, we could potentially make a profit off of a pre-morning or early morning bull run, because I really think today's going to be green again. I say that and the first candle turns red. That's unfortunate. We're just going to keep watching. About 30 more seconds on this candle. I disagree, but what we're looking at is a downturn when we're nearly at the bottom of the RSI. And if you're familiar with the RSI, when a stock reaches about a 30 on the RSI, it becomes oversold. That means too many people have sold it, and it's not really a good time to buy. You generally start to see this sideways movement, and then as it comes out of the sell cycle and into the buy cycle, you see this run up to previous highs, particularly of the week or of the day. So looking at this, we started in the red this morning. I really feel like we're going to turn around soon since we're at such a low RSI. Today we're going to be trading the 5-minute chart, which is this chart here. What we like to do is wait for the sell-off period or the buy period to end before we place our trades. In this case, our next trade will probably be buying calls, just as we monitor the charts and see kind of what the price of SPY does. How I kind of like to find the entry and exit points is we'll use the 5-minute chart as our initial. We'll take a look, hey, what's SPY doing? What's it doing during the open? Whenever it finishes this period here and starts its next period, we'll look over to the 1-minute chart and we will use the RSI and the MACD and then the current prices in relation to the SMAs over here to develop our entry and exit strategies. If we look at this too, by the way, like we're down below the 200 SMA 200 with almost no news. Look how far the distance is here. Just gonna zoom in. Look at this right here. We know that the price of SPY will generally bounce off the SMA 200. We're getting far away from it. We're getting farther than normal away from it. I mean, we look at the distances when it bounces and recorrects back to the SMA 200. Like we're kind of at the outer limit here. And so I imagine if we put on Bollinger Bands, we'd see that we were at the outer limit of that volatility and that we were going to see the correction. And as I'm talking, we're watching it. We already have our 2 green candles to break the trend, and it looks like we're heading back up to the SMA 200. Let's just watch. I don't believe this has very many, maybe 3 or 4, 5 candles at the most left of this buy or the sell cycle, and then I think we'll transition to a buy cycle on the 1-minute chart, which will then lead to the closing of this sell cycle here, and maybe 2 cycles of this chart. So maybe we're looking at 15, 20, 30 minutes, maybe a little longer. Looking at the 15-minute chart, this is another chart that's really important. I'm actually going to go out a little longer. I'm going to go to the 30-minute chart on this one. Okay, yeah. On the 30-minute chart, each of these candles represents a period of time worth 30 minutes. We are currently in a sell-off period. If we look down here, we'll notice that the increase in between these two signal line, or the signal and the MACD lines, is decreasing. That's good news. That means it's going to cross soon, ending this sell-off period and putting us into a longer bull run. So really, really optimistic about today. Going to the week, we're going to look at the hour chart again as well. Once again, if we look here on the weekly, a deep sell-off period, which we've seen over the last couple of hours, and hoping to potentially see a turnaround probably mid-morning. So don't let this dip fool you, this initial dip, unless there's something that's actually, unless there's news that we haven't seen, which we've been monitoring it somewhat. I think that we're going to have a pretty good day today. Let's jump over here and take a look at the news here. Do like to monitor Webull news. Oops, I don't know what happened there. And that does concern us, so we'll look at that too. All right, pivot points. Let's take a look here. Pivot high 589.87, pivot low 578.07. Okay. That's all the article is. Okay. I think their calculations are a little off. I think that it should be a little bit lower, honestly. And I think the pivot points should be about 580. Well, about 580, and then about on the downside. It's hard to say on the downside. We were looking at like 572, I believe. And generally that's when we assume that the... Okay, this is another one. This is just a headline with a tag. This is funny. This is not a great article, I don't think. This looks like it's just a tweet. I disagree. We've already seen a lot of positive things from some of the changes that have been made. So when it's just a market correction, I don't really think it's necessarily as closely related as the media would have believe. All right, let's take a look here. Benzinga, SPY, QQQ. They aren't discussing IWM because it's small caps. Let's see here. Start your day with a live daily market analysis. That's what we're doing right now. I'm assuming that they're telling you to start yours with them, but thank you to everyone who chose to start your day over here at Free the Trade. Looking back at the Fear and Greed Index, we're sitting at 19 again. Still have that correction over there from those levels. And look, here we go. We're entering into our first buy cycle of the day. We're soon to see the yellow SMA 9 cross the blue SMA 21. SMA simply stands for simple moving average, and it averages out the price data from the last X amount of periods, X being the number of the SMA. So if it's an SMA 9, it's the last 9 periods, SMA 21, the last 21 periods. Alrighty, let's see what happens here. We're about to have our turnaround, and let's see if I was right about the 572. It's close. It was 573.77, which is our current low. It may continue down a tad bit before making a full turnaround. While we're doing that, let's jump into QQQ. QQQ is the technology part of the sector. It tracks Microsoft, Tesla. It tracks NVIDIA. Some of these larger cap tech stocks. So let's take a look in here. And we are already seeing a quick shift in sentiment here. Generally, whenever there's a turnaround in SPY, if we jump over to QQQ, we're going to see a faster, more extreme turnaround. So whereas, SPY has this gradual short candle turnaround, we hop over to the Qs and it has just absolutely ripped this morning. Long candles, a lot of jumps. Now it's dipping and it's just going absolutely way down. We can profit off of this volatility by watching SPY, finding setups and such, and then coming over here and taking a look at what's going on these charts on QQQ, and having the advantage of some increased, more dramatic movement, I guess. I'll jump into the 30-minute. There we go. Our charts weren't looking right. Sure they're all set up how we like them. There we go. Added in RSI and the MACD. Okay. Much better, much better. As you can see, they've already entered a buy cycle here. Going back to SPY. We're probably we haven't even fully entered into the buy cycle yet, so still a little bit of time. Once again, if you remember, I said that it would probably be about two cycles before we start to see the green buy cycle on the 5-minute, which is what we're going to be trading today. And while we're seeing green, it's not the pretty green curve that we like to see similar to this. It's kind of a short term, but we are looking here and we're seeing some progress. So hopping over to small caps, the Russell, the IWM Russell Index, similar thing. Once again, it's going to be even more volatile. Small caps, I mean, if you've ever traded penny stocks, let's just start there. If you've ever traded penny stocks, you know that they can pump and dump and move quite quickly. These are super cheap options. Like, we can just take a look at these 0 DTEs. Like, look at the prices here. $93 for only two strike prices out. I mean, in reality, we're about to cross over 205 and hit this. I mean, go 3 and it's $50. You go down here, like, look at the puts, $4 or $41, $40. Super cheap. If you like to trade options on a small account and you're able to hang with some of the movements of indexes and you're not afraid of the increased volatility, these are some fun, cheap options to trade. They're not super scary. It'll probably be okay. They can turn around really fast, so they can be really fun to trade. And it's not just the 0 DTEs. But if you look at the price of these stocks in relation to, for instance, QQQ, those were trading about 100, 200. If we look at these are probably, I was going to say 300 or 400. These are 500. And that's 1 DTE. So those are way more. If you look at SPY, they're going to be probably 500 as well. So maybe even more. There you go. Still trading 500, 400. So yeah, a really cheap way to trade options on a pretty somewhat stable and liquid index is going to be IWM or the Russell Index. Personally, we prefer SPY because it's more consistent and it's less volatile. However, those are some other options that follow indexes that are, beneficial to trade sometimes. All right. I am going to take a look over here. I want to see, it's been a minute since we've checked in on some of our questions. We're going to see if there were any questions submitted. We're going to go over the answers if there were any questions. So let's see what we've got here. And we're starting to see an increase on the RSI if you're still watching the chart over there on the left. Ask a question. We have 2 questions. Let's take a look at this. For credit spreads, what is your max loss and where is your stop loss set? Is that the percentage from the credit you get when opening? Or from the max loss. For credit spreads, what's your max loss? Where's my stop loss set? All right, yeah, let's talk about that. So for max loss, a credit spread is called a defined risk trade or a strategy. That means when you open it up, you know what the maximum amount you could lose is on that trade. And so generally, there's a couple different ways for you to calculate your max loss. First of all, I would take a look at your portfolio, calculate the full amount of your portfolio. Say if you have a $500 account, your portfolio amount would be based at $500 for the day, and you would calculate the max amount you're willing to risk that day, which good levels would be between 1 to 2% for a larger account, or up to 5% if you want to add a little more risk. Going higher than that, I personally don't believe is sustainable, even though you can have short-term success. Or if you have like a $50 or $30 account, you do have to go above that at times, particularly when you're trading SPY with a $30 account like we've done in this challenge. We've had to do some riskier trades. So personally don't recommend it for your main account. That's okay though. So that's how I calculate my max loss. Once I know what that max loss looks like, I calculate, well, how many contracts can I trade and how far can they go negative before I hit that max loss on the account. So if you have, say, one contract, it might be negative 50% before you hit your max loss on that trade. If you have two contracts, it will be 25. It'll be double that max. I'm sorry, because your max loss doubles when you have multiple contracts, or triples if you have three, or And so, if your max loss is negative 25% or negative 50% on one contract, for two contracts it would be negative 25%. So you just keep in mind with that dollar amount, or you calculate out the percentage loss for that trade, and then you monitor that. If you do have stop loss enabled on your trading platform, which some do, like Tasty Live, or I believe Webull has it. Robinhood does not have it, and I hate that about Robinhood because it builds bad habits for traders, particularly if you can't monitor the trade, which I recommend. If you're using Robinhood, watch the trade, close it when you're happy with profit, and then don't just leave it open without watching it, because you might lose, and you're not there to manage it. So where's my stop loss set? My stop loss is set at the max loss I'm willing to lose for that trade. What is the percentage from the credit you get when opening, or from the max loss? Okay, yeah. So the percentage of credit you get 100% up front. And Robinhood is once again really terrible at this, because they don't show you that you have that in your cash account unless you click on it, and then it'll say, "Oh, there's funds, $300 for this credit spread." And they do a really bad job at highlighting where that cash is at. But they don't put it in your cash balance. They don't let you trade with it. They do it. I mean, it's a terrible job. A lot of other brokerages will show you that, but Robinhood doesn't. So you have to just realize that, hey, I'm getting this money up front when I sell this, or when I sell this to open a credit spread. And then you kind of have to do the math with Robinhood. Hey, what's my break even? Your break even is when you will no longer gain any profit if the trade closes at the day or at the expiration at that amount. For instance, if your credit spread was a put credit spread for 572, as long as it stayed above probably 71.50, you would be fine. So you would watch the SPY and be like, hey, we're above 571. That means I'm in profit, even if it shows a negative amount. And as the day goes on and as theta decay decreases the value of that spread, you would be gaining. And it looks like we're crossing over right here. We're gonna watch and wait for the MACD, and then I think I might place a trade here, early morning trade. We're just gonna watch. We kind of got a little bit earlier than expected push. But yeah, let me finish answering this question, and then we'll go and we'll look for a trade. Yeah, so the percentage I'm willing to take profit at is generally between double my stop loss, which my stop loss is about 5%, so 10% is a good enough profit for me. I would prefer 15 to 40%. However, I am willing to take profit at a lower level if the trade looks riskier. And so definitely consider taking those profits a little bit earlier, but at least try to get twice your stop loss. So for me, stop loss 5%, I'm happy with 10%. All right, when looking at charts, another question. When looking at charts to determine entry and exit, I've heard you say on live streams you're looking for confirmations on charts of different times. That could be the 1 minute, the 5 minute, etc. Break down for me what you look at on the different charts in terms of time and how that relates to the MACD, SMA, and RSI levels. Sure. As you see, we have 3 charts here. We have the 1 hour, 1 day. I also use the 15-minute 1 day or the 30-minute. Probably 30 minutes 1 day is a better look at what we have. So these are my base charts for the day: the 1 minute, the 5 minute, and the 30 minute. All right, let's jump in and take a look at this. So if we're trading the 5 minute chart, we're going to use this as our basis for what's going on. We're going to use our 30 minute as the basis for what the long-term trend is. So right now we're in a bad long-term negative trend. However, it's starting to come out of that trend. So we know that our next trend is going to be a green bicycle. So our trend is going to be positive and up. So super excited about that. We'll just keep that in the back of our mind. We could also look at the highs and lows on this chart and see kind of what's going on there. Like, hey, we have this high of, it hit 582.79 within the last couple candles. That's something to keep in mind, because when we push up, we're going to be looking for those levels. What's the highest on this chart? 594, and the lowest is 573. Good levels to know. And those can be our outer level limits, so that we're looking for corrections around those levels. Also looking at the 200 SMA as another place to correct, 584.51. So yeah, this is a good kind of what's the trend for the day, or what's the trend for this trade. This is a good indicator of what our exact trade's going to be. This is the overall trend. This is the trade trend. So what I'm looking for here is we were looking for a crossover similar to this in the direction that we're wanting to place the trade. If this was green and about to turn red, we would want to look for something here where it's green and about to turn red as well. That's when we'd place our trade. Now that we have decided our trade, we're going to look and watch for the optimal entry point over here, which in this case would be a crossover, lower RSI, and we're looking for this right here is called a golden cross, when the SMA 9 crosses through the SMA 21, and that will determine our entry. So when we're set up and we're crossed over here on the MACD, we'll look over here and wait for the golden cross. When that cross crosses, we enter our trade, watch back over here as the trade develops, and then we might consider looking back over here as this one goes into its next sell-off cycle. We want to sell off before this chart sells off. And so a little bit of jumping back and forth between these period charts, but generally you'll get a better entry and exit level. One of the problems that I personally deal with when doing this is it can be hard to figure out when that particular buy or sell cycle will happen. So it's best to watch for the MACD cross here, and then to watch for the trade, or for the cross here, because you can enter a couple of cycles early on the 1 minute, maybe 3 minutes early or 2 minutes early, and potentially go negative in your trade for a couple minutes as you wait to fill at a better price. Whereas if you wait a little bit, you could potentially have a better fill price, and because of that, see a better profit. So like a 20% trade rather than like a 10% or 15%. So not that you won't make money, you can just make more. And if you go way, way too early, you could potentially see a winner be a slight loser, or just a break-even trade, which isn't ideal. So yeah, that's kind of how, or what I'm looking for in those situations. Let's see. Look at the chat here. Anyone else hearing some occasional buzzing, or is it just me? I hear it sometimes, but it's just mic feedback. Did we cover our expiration date and strike price for our calls today? So generally we're going to be trading 0 or 1 DTE. That's for day trades, even on the 1 DTE or the next day expirations, which would be the ones that expire on Friday. We're going to close those out today because it's really just not a good idea to hold short-term expiration calls, options, puts for a long time. So as far as the audio issues, we have had a couple of issues this morning. That's why we were delayed in starting the stream. We think we're having a memory error with the computer or something like that. And so they were able to get it working, but we may have to look into getting a new one or working on the maybe switching out the RAM sticks. So if there are issues, please let us know. And we apologize in advance, I guess. Let's take this time. Everyone go down and make sure we like this video. That helps us be more visible. That helps us share our trading information with more people. We're not trying to pump and dump. We're not trying to do anything, but we are trying to educate and help people be better at trading and learn more about the stock market. So if you would do that, we would appreciate that. Alrighty, after this short little dip here, we are now heading into another slight correction on the 1 minute. Appreciate that. Thank you. Origanti, R. Origanti. And these are the market cycles that we were talking about earlier today when we were speaking on, you know, the overall broader market cycle. Like, hey, you have this long uptrend and then you have this downtrend as the market builds up a stronger base, finds those bottom support levels, and then makes a new run for a high. You see the same thing on these 1 minute charts. Like, you see a run up, then you see this downward trend for correction as we enter the buy or the sell-off cycle. Then you'll see us go into a new buy cycle again and make another slight run up. So the fact that people don't take these micro movements and stuff and apply them to, say, you know, the all-time data. Like, look, not every movement down is a market crash. It's just a regaining a level of support and pushing higher, and it happens all the time. And so for some of these people to freak out, you know, in news articles and spread this fear and this misinformation, I think is a really I think it's terrible for newer investors and particularly the retail investors, which would be people who are not part of an institution or a brokerage, or they're not trading professionally. It's just people on their phones on Robinhood kind of thing. When the 5 minute MACD histogram is positive and the 1 minute is negative, turning positive, is it a good entry? It could be. Personally, I like to watch the 1 minute. I'll just show you kind of my entries. I like to watch the 1 minute, and I like to catch it as it comes out of the red cycle, because generally it's oversold, and if you enter a tad bit early, like we said, it can turn your trade a little negative for a quick minute. So I've found that generally the best entry is right at the crossing of the MACD and the signal line. So this cross here is generally the best entry. If you were going to sell a put, you would sell right then, which you have a downward trend here and you have a slight downward trend, so you could possibly get away from it. But since we're coming out of this sell cycle, I'm going to wait until this turns into a buy trend. And as it starts the buy trend, and as this one starts the buy trend, I'm going to look for my entry as we leave the sell trend and go back into the buy trend. Because right here, that was not a very big deep movement. I think we'll still have a little bit of movement here, but not there yet. So, all right, now we're watching. This is about to cross. Once these two cross, we start to enter into another buy cycle. But yes, to answer your question, yes. However, I generally feel like I have better fills if I wait till the end of the sell-off cycle on the 1 minute or the negative cycle on the 1 minute or I guess the opposite cycle on the 1 minute if I'm trading the 5 minute. So here we are. And here we are over here. Once we cross this 500 on the, or not 500, this 50 level on the RSI, it generally is safe to assume that we're in a, or that we're going into a new buy cycle. So one way to do it would be to use this RSI. I tend to use other indicators, but crossing over here and then watching the 50 level RSI on the 5 minute chart, which is the one we're trading. Also, we want to see the yellow SMA 9 cross above the SMA 21, which is the blue, and make a run for this SMA 200. Right now it's at 580, so that's going to be about our price target. We want to exit our trade if we get a good run up. We want to exit our trade before we hit 580.23. So maybe at 579. Now my strike price is going to be probably, I generally like to enter my strike price prices right at the level we're at. So I might do like a 575 entry here if we were to do a call. So a 575 call. Particularly if we can get when it flicks down to 574, because we know it's hit above 575. If we can get it when 575 is out of the money, right before it flicks back into being in the money, we'll get a cheaper fill on that call and could potentially see a better fill. Is 579 too far off? 579 too far off for what? For a strike price on your call? That's what you can afford. Trade one contract and look at QQQ because they might be a little bit cheaper for you. Also, instead of going 1 DTE, you could look at 0 DTE. So let's see. These are going to follow similar patterns. They're a little more, they have a little more movement, but it's going to be a similar pattern. Also, IWM is probably going to loosely follow SPY as well. This one is a whole lot more affordable. Like, look at these 0 DTEs. If we can get this one at, say, let's see, we just entered, boom, we got the crossover here. As we enter in, we would place it, this is at 205. If you placed a 206 on this one, you would have a similar result, and it's a lot cheaper. 206 calls. So you might try that. Now, with that, if we're trading SPY, you might be careful because our trade is going to be slightly different than yours. So just keep that in mind. Watch your signals. Watch for your exits over here. All right. Did we miss out? We may have missed out by flipping back over there. That's okay. I think we're going to see one more dip. I think I'm going to try to get maybe a 576. Can we get a 576 fill? There, ooh, it just barely almost dropped below. I really want that to drop. I think I'm going to go with this one here. I don't know. I don't know. I think we may have missed this one. I don't want to try to chase. So if you entered this, you can take profit anytime. Why I'm hesitant to enter this is we are above the 50 level, which is about even. We missed a really good fill price. There's still some top side because we're aiming for the 580. So there is top side. We could be okay in this trade. We kind of missed our fill price. I was distracted and I didn't get in fast enough. So I might wait for a slight dip and try to get in later. Actually, I think I'm just going to pass this trade up. But that was our trade. That was a super good trade. But I missed our entry, and I apologize. That's my fault. But I do want to show you what you do if you miss the entry. Don't chase. There's going to be another setup. There's going to be another trade. We'll just wait for this to come back down on its next sell-off cycle, and we'll enter again. But that would have been a really, really nice trade. If you did get in, congratulations. You probably are making quite a bit of money. You should be up quite a bit. 345, we entered, you would be up $50 right now per contract. So, man, what a bummer. Let's see. Yeah, that's unfortunate. That's all right. I would start to take profits because we are at the top here, as you can see, and we're going to start to see another dip. You still have plenty of time to take those profits, but something you could consider is to get out now or to get out soon. Like I said, we have a little bit of upside, a little bit of time, but you can think about taking those profits. But here's the run up to 580. It's doing exactly what we expected. Unfortunately, we missed it. We missed the opportunity. Jair, did you enter a trade on IWM? If so, I'm going to flip over here and actually monitor for you. Take a look at it. Same things going on over here. We got a really good fill price. If you were able to get it 204, you're doing really good on that one. The 204, yeah, you're doing great. You didn't. That's unfortunate, man. That's okay. Similar thing here. We're hitting that top level. We would start to consider hopping out of this trade. So. And this is one of the things that I personally don't like about doing the live trading is because you'll see the setups and stuff, but you'll be busy explaining something, and then you'll look back over it, and man, you missed your entry, and then you have to make the hard decision to not try to enter that trade and let it run. But I promise you, if you ever get distracted in the middle of a trade, you miss your entry, just let it pass. It's not worth it having less profit or buying at the top and catching that downfall. So practice good habits, be a good trader. And I'll just be sad over here that I didn't get it. Didn't get in that. Let's look for other trades though. Let's look for something on QQQ. Okay. Ooh, this actually looks kind of promising here. We've got a really strong upward trend. It's moving over sideways, even though it's in a downtrend. I don't recommend to trade against the trend, but you can. People do it all the time, calling it like a mean reversion. You generally want to take shorter profits, but you could potentially enter soon on this with a put and catch that correction. I'm still kind of sad we didn't get into that trade on SPY because it's still going, I'm sure. Yeah, it just about ended, so. What a deal. We missed it. That's okay. All right. Now that trade's over, we're watching it correct down again. We'll probably see it push up again in a second. Is generally if you're not at the end of a buy cycle, and we're nearing the end, but we're not there yet. Yep, here it is. Boom. This is exactly what I wanted to talk about. You'll see another uptick on the trend. you'll see a couple more candles, and then followed by another red one, and then a couple more, and then as we end, you'll see the major sell-off. So similar over here, we see the end of the buy cycle. You start seeing your major red candles. You see a little green one, then you see your red one, and then all of a sudden you have your first one, boom, then you hit another, you hit a slight red, and then you have your major trend. And this is where you want to buy on these red candles or these opposite candles. You can buy at that level. You can get a major profit. And then you see this is called a doji candle, DOJI. It doesn't have a ton of volume. It doesn't have a lot of difference in price. Generally, when you see that, you kind of know you're almost at the top. See a red candle, then you'll see this hammer, which generally means a sell-off is coming. Another doji candle, another one almost, and then we turn into a red buy or a sell-off candle. So generally, those are different ways to read candlestick patterns to know when to place your trades and when to exit your trades. You'll notice how they correspond to the SMA too. You'll see that their crossovers are generally going to appear near them as well. Looking at this, we did cross over the SMA 200, but it's a good news for the day. Expected. It's good news. That generally means it's bullish. Got this random 583.05 spike way over here. Who knows? We could potentially see a run into the 80s, 580s. Why not, right? It seems to be our upper limit, though. This trade was yesterday. Yeah, we could definitely see us recover some of that. In fact, we could do like 578 calls for later today, since we still haven't crossed over here. So with this, we haven't crossed over. Let's take a look at the 15. Honestly, let's change up our strategy. We didn't catch the slower, or I'm sorry, the faster one. We might catch the slow one. Let's take a look here. Okay, we're not quite at our crossover. That's actually beneficial. It's good to know. Close, but we're not there yet. We could potentially catch a longer. All right, we're just over 50. That's actually good. It's actually good. So what we can do is, instead of trading the 5-minute, we can trade the 15-minute, and we can use the 5-minute for our entry and exit. So right now we haven't had a golden cross. Right now we haven't had a golden cross. We'll probably see it another cycle or two as we enter into a major buying period. Also, looking at our 30-minute, we still haven't crossed that yet into our buy cycle. We still have potential to catch a big move today. It's just going to take longer for our setup. So don't chase, look for other trades. That's what I recommend. Don't chase, look for other trades. So that's what we're going to do. We're going to watch this and see how it turns, or how it see if this transitions into a major buy period. We have the MACD crossover. Still waiting for a golden signal. And it's going to take longer because now we're trading the 15-minute and the 5-minute. So each of these is going to be 5 minutes. Each candle over here is going to be 15 minutes. And each candle over here is going to be 30 minutes. So we could be sitting here until, 12 o'clock, 2 o'clock. So that's okay. All right, we are nearing the crossover on our 5-minute. maybe another 5 minutes or so. Let's take a look at our 1 minute because our 1 minute is telling us what's going on with the 5 minute candle. So, all right, we see it is about to enter into a sell-off cycle on the 1 minute. So we're going to have to wait through a sell-off cycle. So probably another 5 minute. Over here, this was a 2 minute sell-off cycle. So probably 2 to 5 minutes based on the historical data. And here we go. See a little bit deeper of a downturn. I also want to jump back while we're waiting. Let's check investor sentiment. Once again, still at 18. Or no, did we drop one level? Were we at 19? Did anyone remember? I don't remember. I think we were at 19, but we've been at 17, 18, and 19. Just really haven't moved from that. "43 minutes ago, stocks sink amid turmoil, and yet we're trading up." I love how the news media, they just literally don't look at the context of the market at all. It's kind of frustrating. But okay. All right. Here we go. We've got a crossover on the 30-minute. This is actually super, super bueno. Good news. All right. Check over to the 1 minute. I don't want to enter here because we're at the end of this buy period, meaning we'll probably see a little bit longer. See one more sell off before it's time to enter. So we're going to be a little patient. Let's look at our 10-minute and see what's going on. Don't have to do now. Maybe we should do it like this. I think this is going to be a false switch over. Either that or it's going to be a super shallow sell off period. Super bullish in my opinion. I'm really sad we didn't get into that trade. We probably could have, but we didn't because we need to practice good habits. And that's boom, here we go. We have hit a golden cross. It's good news. Golden cross. Looking at a 579.80. 78. Do we really just it's moving so quickly up though. I can't, by the time I figure out what my strike price I want to add, it's already zooming up. I mean, it's good, but I don't like it. 78, 570. Would really like to get in at 578. Kind of expensive though. how much we would have made if we got in on our 576 prices. What? Forget it. Going in right here. Going in right. 78. Where's my 578? 3. I cannot get 3. I can only get 2. See how low we can get this. We're just going to go entering. All right, at this point, we are entered. We entered at an average cost of 3.01. I'm going to take, let's see, a 3.61 exit. What I'll be happy with, so 3.61. Go ahead and set up my limit order for it. We'll do both contracts at that price. And yeah, let's see what happens. Currently, we're up 20 bucks. So let it ride. Now, at this point, I do kind of want to watch the market a little bit closer, so I am going to go down to the 5 and the 1 minutes and just watch what's happening. Okay. We're holding. Let's just wait. I do think I need to close in some of my profit though, so I actually might change my stop 0.01. Just let's be conservative here. Let's aim for 10%. Let's see. And it looks like there we go. 3.31 is my exit on that. All right, so we sit. Unfortunately, it looks like it's dipped a little bit. We probably could have got a better fill on the 578. That's okay. We're just waiting through a slight correction. Fortunate though. And now we're out of the money. That's actually bad news, so that's not good. Let's go back to the 1 minute and take a look, because we might have to wait through a couple cycles. And yes, now we're entering our sell cycle on the 1 minute. This is a longer trade though, because we're trading the 15-minute chart, so we're expecting to hold these at least 15 minutes, if not longer. So not terrible still. Got plenty of time. All right, looking at my thing, I've actually hit my stop loss on this trade, and so we're going to abort because even though it could turn around, we are right at our stop loss. I say that and it bounces right back up. But we are at the stop loss, so we are canceling the trade. Boom. And we're out. That really stinks. That really stinks. That's not fun, but at the same time, sell cycle. Yeah. Hey CEO, we picked a SPY trade for 578 strike. We missed our first entry because I was distracted and I called it. It ran really well. We had a good trade. We tried to do a longer trade, but unfortunately hit our stop loss. So we canceled that one. So sad news on that. Missed out on pulling out. What should I do? You should just bite the bullet, man. Just pull it out because it's not worth it. The longer you wait, the longer that you increase those losses. So that's why we have a max loss that we put on our trade, and when we hit that max loss, we step out, because if we're taking double, or if we're taking a higher percentage of profits rather than our stop loss, then over time, for instance, yesterday we made over $100 in a trade. Once we make that $100, we have, let's see, if our max loss is about $50, now we have 2 chances to trade where we could potentially make $100, but that loss of $50 isn't going to erase our previous trade. Does that make sense? So as long as we limit our stop losses to being very small losses, and we take profit at double the size of our loss, then we should be good to go over. So, oh well. At this point, we have about $190, maybe just under $200 to trade with now. I do want to look at IWM and QQQ because those are things that I can trade with that amount. Let's take a look at the 5-minute and the 1. See if there's any entries. Really fortunate. Let's see here. Stream fear has increased actually by 1 point up to 19 from 18. Here we go. We're going into a buy cycle. Made 17 in 2 minutes. That's awesome, dude. That's really good. Yeah, we probably could have made more. We probably could have even gone green on that call later today. Not worth it when you hit your stop loss like that. So, I am interested in maybe catching a downturn here. It's not looking good for a trade here, because we've got a death cross up here, but we also have a death cross going into a bicycle turn. So nice. Unfortunately, it hit the stop loss on my account, so we trade out like that. So not a good thing. No, that wasn't your fault, dude. That's fine. It happens. It's fine. It's totally. That's why. So, it was my own fault. I kind of get distracted a little bit when I'm explaining or and so it's streaming. Personally, I don't recommend it if you're trading. It's hard to do. It's harder than I thought it would be. Um, and it's best if you can clear your environment and focus on the trade. But I'm not doing that, so I guess do what I'm telling you, not what I'm doing. I don't know. Generally, if we hit our stop loss for the day, it's best to just stop trading, go take a break, walk around, come back tomorrow. So, any questions or anything else that you guys want to discuss? Oh, yeah. Uh, R. Origanti says, please help me understand what you mean by the sell cycle. I think we addressed that. If not, this right here, this level or this red histogram section on the MACD is a sell cycle. So the market goes through these cycles and you see buy cycle, red sell off, green, red, green, and it's just this back and forth cycle of buying and selling. And so the market goes through these and you always see them. And so whether it's going up and down uh, in this relationship called a sell cycle or a cycle, a buy cycle or a sell cycle. Green is for buy cycles. That's when most people are buying. Red is sell cycles when there's a sell off. Another buy cycle, buy cycle, buy cycle, buy cycle, buy cycle, buy cycle, and the sell cycle, sell cycle, sell cycle. And so those are what we mean by buy and sell cycles. Just this levels on whatever's showing here on the histogram on the MACD. Any other questions? Good questions, by the way. I don't understand this. Mexican companies holding back the U.S. bound tariffs or the exports, hoping for a tariff reversal. I don't necessarily think that we'll see a reversal in the tariffs, and I think that we will see some of these companies, even these Mexican companies, deciding, hey, you know what? We're gonna do what like Taiwan or what Apple or the TSM or Apple or Oracle or Honda or some of these other foreign companies that are moving and building factories and building um, research and development facilities and things like that here in the United States. And that's going to be super great for our economy, honestly. So, personally, if you have some fear or if you have some concern about the state of our economy, I wouldn't really worry about it. And here's why. Let's just look at the list. The US is about like what? Let's see. Leaderboard. I don't know if that's a good word. Let's see. Top countries economies. We're number 1 in the world. 33 trillion, about 30 or quite a bit. I don't remember the exact amount, but we're first and we're double the size of the second one. Let's take a look. Okay. This is projected. That's not actual. Let's find actual. All right, yeah, here we go. Here we are. The US number 1, China number 2. Um Look at all the size of these others. Like we get down to Canada. Canada is 1.82 trillion. That is look at the marked difference. And this is old data. This is from 2020 and 2019. We've even grown more since that. I think we're 33% of the world's economy now. Um, so that being said, like I don't understand why people are so worried about some of these tariffs because I mean I do. There is going to be growing pains, but it's like saying, "Hey, we want to be a rich country. We want these results." Um and so And so we want these end results, but we're not, we want a six packs. We want to be able to compete on an Olympic level in a sport, but we're not willing to put in the work. We're not willing to go to the gym. We're not willing to hire the coaches that we need. That's kind of what these tariffs are. There's an end goal in mind with all of these tariffs. For Mexico, we want to see uh, the Mexican government take responsibility for the cartels, which are now terrorist organizations. We want to see them. We want to see them take those on and try to limit that, because cartels are bad for the economy for Mexico. They're bad for our economy. They leak illicit substances over the border. They take advantage of the Mexico citizens who are struggling financially already. They increase that by taking advantage of them, um, through some of their, through their actions, through enabling illegal immigration, through threatening families and such, and extorting money from these people who are already suffering and already looking for asylum in other places. So I'm not going to go into the politics behind the border, but that's just on the southern border. We move up to the northern border and we have illicit substances from China that are leaking through our northern border at a rate that's almost as bad, if not. I think actually the rate that they're coming through the northern border is greater than our southern border, but we don't see a lot of news media talking about it. Furthermore, we see people from China, people from Canada coming into the States on work visas. The work visas expire, and then 2 years later, they're still in that position. There's spies that come over on a work visa and get hired on at some of these companies. Their work visa expires, and they're still there in those positions. They're doing corporate espionage for some of the people, for the CCP, the China government. You saw 2 years ago in California. Yeah, sure, and that's understandable. Um, I understand that, Jay. You're right. We do have to acknowledge that. Um, I acknowledge that the United States, they get a lot of their weapons and stuff from the United States. But I'm actually not even talking about Mexico. I'm talking more about China right now. Um, we're seeing a lot of espionage and stuff, things that people don't even really know is going on. 2 years ago in California, we saw a lady on a work visa come over and get a corporate position in a company. That visa expired by 2 years, and then she ran and was able to get elected into a political office as a non-U.S. citizen with an expired visa. And when people acknowledged that, and when that came out, the governor of California defended her right to be a political leader in the United States, while she had ties to the CCP, which is the Chinese Communist Party. Um, and there were previous suspicions of espionage and stuff. And personally, there's no other country in the world who would allow a non-citizen to be in a political office on a local or national level. And I think it's something that we need to realize as an economy. I'm not against any person or any person in the world. I've traveled to a lot of international and foreign countries. I still do. Recently got back from a trip in Africa. Um, and so I see the economic, and I see um the mindset of some of these people. And I'm not trying to push a political agenda here. I'm just saying that there are benefits that these tariffs are doing. We put tariffs on Mexico, and we put it on it with a if-then statement. Hey, if you want to bypass these statements, if you want to bypass these tariffs, then you can come to the United States and invest in the United States economy. You can, support the border with troops. You can help us crack down on cartels, which actually they're living in other countries. They have found them in the U.S. and Canada. I'm not sure. I'm not sure what you're talking about on that, but I agree. There are a lot of variables here. Um, recently, though, I think within the week, actually, or the last 2 weeks, Mexico sent some of the cartel leaders they had in custody to the United States so that the United States could secure them in prison as terrorists, so that they wouldn't be able to get out and terrorize some of the Mexican people there in their country or the United States citizens here in our country. And so I'm not against, like I said, I'm not against any individual, and I'm not against immigration at all. But I do think there are some serious problems, and I think part of that is, in fact, the process by which immigration occurs. I think we need to revamp that and make it more accessible, because I do think that there's problems there too. But all this plays into the market and to the economy. And I know this isn't a political platform, and I'm not trying to push a political agenda, as I said. But things like this news article that talks about these, these tariffs and such. I personally don't think the tariffs will be reversed anytime soon. And I think probably the best bet for some of these people would be to consider bringing some of that into the States. Now, like I said earlier, we do need to revamp our immigration policies. We need to revamp our process by which you apply for that. And then we also need to go in and look at the system and be like, hey, if we're giving work visas, we need to make sure that they can renew them easily, so that they don't accidentally expire. We need to make sure that, there's just so much we've got to work on. But I really think that it would be beneficial for some of these companies to come to the States. They would have access to no tariffs, and then number two, they would have access to safe environments where they can build things. They would have access to technology that some of these countries don't have. I'm not saying Mexico doesn't have the same tech, but there are some things that are easier to get here in the United States than in other places. So, yeah, hopefully that brings some of the companies here to the States. It'll help us. It'll help them. I think it'll be a good thing. I think it's a bad thing. That being said, I wouldn't worry about tariffs as a United States citizen, because our economy is the most influential in the world, and this is a way to bargain and to actually trade and create better conditions economically for the United States and for the U.S. citizens. So I think it's a good thing. I think it's necessary. But this is the part where we're going to the gym, and it is going to hurt a little bit, but in the long run, it's going to be well worth it. So, right. Well, I think that's going to wrap up everything for today. We're ending it a little bit early, just not much going on in the market right now. And so I appreciate all you guys for tuning in. I hope you have a great rest of your day, and thank you for following Free the Trade.